Welcome, welcome. Hopefully the stream will work normally right now, but I think it will. So welcome HDOP and Arnold. Good to see you guys. Let's wait a little longer for some more people to join. Welcome Daniel as well. Pak ik even een pilsje. Dat zie je. Poeh. Ja, dat lijkt me een strak plan, Arnold. Welcome Lise as well. I heard it's bloody hot in France. Luckily it's a bit better here. But also cannot complain. Okay, so yesterday, unfortunately, the stream didn't work well, probably because of the heat. And I have a big screen where it's connected to. It was charging. I think he got it a little bit too hot to probably stream it. But right now everything should be normal. So we can discuss quite a lot of charts. And we are back to the normal charts. I think most people enjoyed it more. It's also a bit cleaner. And since my main goal is to also educate well, it's important that everyone sees it clearly. So we are back to the normal charts. So what we have is basically still the same downtrend we have in bin. From the top, we technically have low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. And then yesterday I talked about this lower high for that lower low, where technically this is just our existing downtrend. And on the daily time frame, we had this as our key market structure low. And over the weekend, we aggressively moved into it and then saw a good bounce over the weekend. However, moves during the weekend are always a bit questionable. So we have to see how that forms. But the first reaction from the buyers was definitely good. Welcome, Zlatan, as well. And yesterday, what I was mainly watching for was that we had pretty choppy price action around here. Let me clear the view up. And my key level to watch was this bearish market structure level, which is always a very interesting level to watch for either sweeps or not. But we rejected before it, and today we had a very aggressive, or at least yesterday we had an aggressive move up, and then before that key market structure level we rejected. So we had that very local accumulation right here with that 1, 2, 3, showing that accumulative behavior, and then here we swept extreme liquidity, and then we pushed up, and there I said this is my, basically this demand zone is my PY to look for bounces into new highs. That played out really well, and price made a new weekly high, which was the main target because we swept Monday's high, but we front ran the key supply above and at market structure level. And from there we aggressively sold off. So pretty wild price action, not super clean to work with because it's super aggressive up and down. And then today we had some choppy price action right here, not really anything to do. And there I said I'm waiting for either a new, here in the sessions we could see it, we had Asia high and Asia low, and then London was basically general London in between. So I was waiting for either the high or the low to be taken, and I think 2 minutes after I posted that, price swept the high and then directly sold off. So yeah, overall pretty hard price action, not easy to trade because there was also not really any structure confirmation. Essentially swept this high and then with a pretty aggressive move, so from here and then directly sold off. So an aggressive move, not really anything to trade. But right now we are reaching pretty important levels because this was our daily swing failure. Go to the daily, you can see it more clear. Where we wigged the daily market structure low, then saw a good bounce, but we failed to break that internal structure back to bullish right here. So technically we are still in a downtrend, and right now we are reaching this key level where we had this refined demand sitting right here, which we wigged and then bounced from, but right now we are selling off again. So there's not much right here. We have a very tiny demand level resting here where price can tap into, but overall yeah, everything is pointing downwards. And then the next key level is basically around these lows to see if buyers can step in after sweeping this low. So setting some alerts, but yeah, locally peers are definitely in control. So maybe even if we get a move into that supply, we can watch what happens. Right there. But overall, it's looking pretty heavy. Also, if we look at the VWAPs, this one still trending down. The one from the high is also still trending down. So we can watch how price behaves after sweeping out that weekend low. And if we bounce from it, then this can potentially be our new range to watch with range low, range high. And then that this is the range to look for high probability setups. But we have to keep in mind that if buyers do not step in after sweeping this low, so right now that's this low, that it can fall off quite quickly into these levels, and then it starts to look pretty heavy, like very heavy to me. So pretty key what we're gonna do around these levels. In case I'm gonna show it on the chart, if we get a good reaction after sweeping those lows, let's show it on the clean chart. Let's use Maxi. Then if we get signs of buyers stepping in, so we sweep this low and we get a buyback, then we can potentially look for this as our new range with range low, range high, and then see if we have tap 2, tap 3, and then trade it higher. But beside that, we cannot fade the trend too much. However, I was mostly interested in shorts if we swept that market structure high or came into this level. So right now, this is pretty low to get into fresh shorts for me. So yeah, I'm just observing and see what we do. But we are definitely at key levels. Let's look more locally if we have something. Yeah, we basically have this local demand, and then below that, nothing. which is also a Saturday low. So oftentimes market wants to retest weekend levels. And yeah, also here we have they are clearly looking for buy side liquidity to trend it lower. So yesterday they pushed it higher, grab liquidity to push it down. And today they did exactly the same, where they take buy side liquidity and then nuke it down. So into proven otherwise, this can also just go down. So potential shorts from there are not weird to trade. However, it's not a high probability model. If we translate it over to USDT, let's clean it up. Then that one is still in that confirmed model 1, 1, 2, 3. Clearly broke structure back to bullish right here. And perfectly held the 4-hour structure from the low up. So here we have high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then yesterday we came close to that market structure low and then bounced from it. So unproven otherwise, this can just be bullish continuation into new highs. And then I'm very interested in the reaction from this level. We have a big fair value gap, like single prints, with clean supply above it. So from here you could potentially get a reaction. But for now this looks bullish unproven otherwise. And it also left behind some demand yesterday. So let's see. It's weak demand, but weak demand almost always is also demand on the lower time frame. So let's see. Yeah, here. You can see super clean 30-minute demand. So in case price comes back down for that, it can also be a bounce for new highs. And very locally, you could also see this as one, basically a low and then a distribution, a model 1, 1, 2, 3, flowing over into a accumulation. Very hard one to play because this was aggressive, but you see the reaction from it. So right now I am expecting higher prices on USDT into proven otherwise. Where potentially this is your potential range to watch. I don't really see it as a range, so I'm just moving it with the lines. So let's see what happens if price comes to that high or reaches these levels. So overall, pretty sideways price action, but yeah, Bitcoin is clearly in a downtrend locally. So, but overall, if you look at the price action, it's not super clean. So if you cannot find trades in here, that's pretty normal because this is just very choppy price action. And you should not try to trade every move, because that's not the job of a trader. You should only look for your models and execute them. So missing this move, for example, that doesn't mean anything. You can make yourself crazy for not catching that, but very, very few people catch this. This is just super violent, up and then down. Same as this morning, as they did right there. So let's wait for the alerts as something clean to develop. I said, this is what I'm hoping to see, is that price takes out that weekend low, that we then see buyers step in, and then from there we can potentially just play this range. And then from the high we're to the potentially lower again, because we are in a downtrend, so shorts are the easier trades. But yeah, we are at pretty low levels, so if you look at it from this perspective, I would never short in discount, which is right here, unless you have super clean triggers. But otherwise I would wait for price to reach at least your premium levels, and then short it from there. So let's see, for Bitcoin I'm not seeing anything too interesting at the moment. But we have some other charts which were more interesting. For example, gold. Let's one moment. On gold. We had actually overnight a distribution, but let's first zoom out a bit. It has been in this kind of, here we had the distribution as well. With that 1, 2, 3 break structure, and then we move down. And from there we are basically in this downtrend with lower lows. And so far this is a lower high for lower low. So right now this is our market structure high. And locally I was not watching it, but overnight also here, just as Bitcoin, it did not take out the market structure. We have low, lower high, lower low. And if you sweep that, that's a super clean trigger to look for shorts. However, instead of that, it forms this range with low, high. Then you had a super aggressive move into your second tap. That's generally not the best to have, such an aggressive move. But from there you consolidated a bit, made a slight new high, and then broke structure right here, and then right here again. And that was potentially, or just a clean short to take. Should take into account that you have demand at these levels. But since you are in a downtrend, price was at the mark, or at least close to the market structure low, close to the anchored VWAPs. So then you are in a downtrend, so shorts make more sense. So if you then have a distribution at your hands, that's the easier play to trade. So here you could have actually, if you wanted to be risky, take it on this internal break, but I should wait for this break, which was better. I could put your stop above the high and simply target the low, and then you have a clean 3R. It happened overnight, so most of us were asleep, I believe. But yeah, clean example of a Model 1 distribution. And right now, I'm watching to see if price is losing the range or not. We swept the deviation threshold, but on the higher time frame, so yeah. Right here, you see that we wicked it. So that's not a close. So this could potentially be tap 2 of the accumulation. However, I don't like it at all because we are in a downtrend. So what is more likely then is that you underproof it, otherwise just continue lower. So triggers have to be really clean. But if price can hold here and, for example, clear that supply and then move something like this, then it could potentially be a long later in the week. But for now, it looks pretty bearish. Also, if we look at the volume profile, then this supply overlaps with the value area low. So you can just come back into this level. And if you show weakness, then a short is the easier way. And then trade it lower. Because gold doesn't have any demand zones holding it up. So it can also easily slide much lower because there's nothing to hold price up from basically from these lows. So pretty interesting chart to see if either buyers can step in or if you get a short trigger for lower. Because technically we just have low, lower high, lower low, lower high, lower low. So this can also be just lower high, lower low till you get some aggressive buys. So that's what I'm looking at for gold. But yeah, locally everything is pointing lower. Also, if we look at this right there, momentum is clearly to the downside. So and it's also always easier to trade just with the trend. So let's see what happens. Welcome, by the way, Sudo and Matt. good to see you guys, and apologies for the stream yesterday, but I guess everything is now working properly. So let's see if gold can come back to this value area low, and if it then shows weakness, it can be a potential short. And if buyers show more strength, then it could potentially turn into a bigger range. But for now, it looks more like just a clear bearish trend. So then shorts make more sense. BTC, in meanwhile, is selling off further. Let's look at some alts. So ETH, yeah, I don't like the ETH chart. I put it back in the watch list at the second place just to see the weakness compared to Bitcoin. But overall, I also shared it in the group. Like very weird price action. Kind of a 1, 2, 3 kind of distribution. But overall, yeah, quite a lot of liquidity above. Here, a lot of liquidity below. And right now, just in middle. Also exactly at the point of control. So yeah, I'm not interested in trading ETH here until it gives really clean triggers. And then a clean trigger here with super clean supply above. So if you come into that, I'm interested in shorts, which could align with the distribution. Or if you come back down, potential longs, but overall, I think the ETH chart looks very, very weird. And then I'm mostly interested in price, either giving a super clean model to trade it towards all the liquidity, or just wait for all the liquidity to be taken and then see if there's something clean to work with. Sol is basically the same, with a bit cleaner chart, with range high, range low. Then it swept the high, directly moved back into the value, and right now also kept between value area low and value area high. But as you can see, you have technically this low right here, this low right here, and that low right there, all creating liquidity, and then clean demand directly below it, which is super clean 8-hour demand. So I have some alerts in this demand to see the reaction, because you have liquidity, demand, value area low. So if you tap into it and then basically deviate your value area low, then it can be a long trigger simply back to your value area high. Just playing the rotations as here. Deviate it, deviate it, deviate it. If we deviate it here, deviate it as well. If you deviate it and then give a market structure break, that can just be simply a simple long back to your value area high. And also because on the lower time frame, you are building quite some liquidity. Let's clear this up. You can see this liquidity, which could give it potential easy rotation back down if you tap demand, break structure, and then long it back to that liquidity. So that's what I'm watching, but for now also this looks pretty weak, and it can also just directly nuke much more down. So just PY is at demand, and beside that, yeah, also here, nothing to hold price up really. So I think it's a matter of time till we sweep this this weekend low, which is a Saturday low, and then see if buyers step in. I see VeChain asking for link. I will look at it later on. First, I want to go with some alts because Hype gave the short trigger I was looking for, but I'm not in it, unfortunately. Simply because I was not at the chart once again. So we had this super strong uptrend. And in an uptrend, I keep saying it, you should be very careful with drawing a chart, a range everywhere, just expecting it to be a distribution. You either have a super clean range, or it's more like a trend. But right now you formed pretty clear sideways price action. So then you can look for potential shorts. And right here we had 1, 1, and then 2. And locally, oh, we did not even sweep extreme liquidity. This was basically our first low, lower high, and then lower low. So then this is your extreme liquidity level. And for model 2, you always want to take that or tap into extreme supply. There was not really extreme supply right here. And why I like this potential model 2 is because you clearly broke structure back to bearish. So you broke this uptrend, high, high, low, higher high. That one broke to bearish. And you also broke structure higher up here locally and on low time frame, probably also as well here. So then it makes sense to look for a model 2. What a lot of people make the mistake is that they want to look for model 2 when structure never broke back to bearish. If this did not break back to bearish, then it doesn't make sense to look for model 2. Then a model 1 is much more likely. But now, since we broke structure right here clearly back to bearish, came back up, then you can look for the model 2. However, we did not tap into extreme liquidity, so technically not the best trade, but we had some other confluences, which was this. We were in the fib, let's see. Yeah, so price came into our favorite fib level between the 7.2 and 7.8. And it was also at the value area high. Right there. Or nearby the value area high. So nearby the value area high. And you had pretty clean structure moving into it, which is always something you like to see. However, in this move, you only broke it back to bearish right here. So then shorting it there, putting your stop there, and then targeting the low. Yeah, it could be a trade, but I would personally not have taken it. What I would have liked to see is this move down, then a new high, sweeping that extreme liquidity, then breaking structure, and then short it from there. Then you have this stop loss there, target the low for 3R or the demand below for 3.3. So pretty clean pre-planning, but yeah, did not really follow my target since that was a sweep of this liquidity point. And beside that, let's see, high time frame. High time frame, it remains bullish. So the funny thing is that everyone is always looking for shorts on hype. But if we look at the 4-hour structure, then we still have high, higher low, higher high, higher low, and now we SFP'd the high, which means that the range low is also your market structure low. And that's always super nice because that aligns with the Wyckoff models, which means that if you then take out the low, but do not break it, ugly drawing. If you take the low, but don't break below it, so stay within the deviation threshold, then technically the high is your targeted level again. And right now we swing filled, so we have market structure high, high, low, swing fill, so we SFP the high, which means that this low is your targeted low. So for price, it's very likely now to move towards that low. And then we can watch, do you aggressively break it? That would mean that you, for the first time, have a significant break to bearish. If you stay within the deviation threshold and, for example, only SFP it into that demand, then this can just be another reaccumulation before trend continuation. So let's see how it behaves. But for now, I'm expecting lower, simply because we swing filled the high. So this low is our targeted low. So maybe if we get a retrace with weakness, we can short it and then see the reaction from there. Overall, pretty clean chart. Then Tao gave, we have this massive range, range high, range low, and then this super ugly buildup of liquidity, which sooner or later is going to be taken. And from there we had super aggressive move up, super aggressive move down, and now quite a lot of chop. But yesterday we had a clean local model. We have some clean demand below it, but if we look at, like, sometimes if you zoom out and you think, oh, this is all pure chop, in which you could technically see it as a range right here. So then this demand is also a POI, but more locally, it formed a distribution yesterday where you trend up. So you pull your range from high to low, and Daniel came with this one. So that was clean. I did not spot it myself. They have tab 1. Let's just do it as usual. Tab 1, tab 1. Then a sweep, move back into your range. So then that's a valid tab 2. Then you extend your range. And then price swept the high and pushed back down into it. So this is your tab 3. And this is all very local. So keep that in mind. It's super local price action. And then here you broke on the 1 minute structure back to bearish. And then a strong move down. So that kind of signifies that this is a good high in the making. And that technically your low is the targeted level. So with this, let's zoom in. If you look at the structure, we have basically high, higher low, and then here higher low. Did we also structure here? Okay, kind of equal highs, otherwise you also had structure right here. But right now I see just as this, where you broke structure back to bearish right here. Which means that basically this whole move is structure supply or range supply. Also because you see that aggressive expansion lower, which means that this is your supply PY to watch for. And then we have the model 1, 2, 3, which could flow over into a model 2. For that, price needs to move into extreme supply or extreme liquidity. In this case, there's no extreme liquidity because the first higher low you make is down here. It's way too low, but super clean supply, which maybe was your value area high as well. Let's check that. Yeah, so that's super clean. Where you rotate, you break structure, come back into your range, come back to extreme supply within your value area high, and reject from there. So I was personally not watching it because I was booking my vacation, but there was structure in this move up. So this is first PY is at supply. It's also your value area high. You already have a confirmed model 1. in which this is your protected high, so that's your clean invalidation. And your target is the range high, the range low, which is still open. So then you can watch, do you have structure from the low up? So you can start all the way down here, but usually I just start, for example, here, and see, do I have structure? Well, on the 1 minute, you have structure. High, 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 low. Then where are two candles going down? Not here, not here, not here, but here you have. Then higher low, higher high, tapping into supply, and then aggressive break, in which this is your reconfirmation for bearish break structure. Technically, that can give you a short trigger right here on that break. Then it is allowed to put your stop loss above that fourth tap and target the range low. That is the more advanced and aggressive setup. If you want to be more safe, you can also put it here, short it on that break, and use the protected high, because that is your safe high, the third tap, and then target the low, which will give you a 3R. This one will give you almost a 7R. Both are valid. This one is more, more advanced, a bit aggressive. The other one is super safe. And then you can see that price eventually took out the low. Well, it took some time, but you can see that the target had been hit for 3R, safe entry, 7R for the full entry. And even locally, it gave almost a reaccumulation. So that was a bit tricky. Where here you have the range, you trend down, so pull your range from low to high. Then you have low, high, tap 2, tap 3. And what you like to see is that local return to zone. But here you have pretty nice local liquidity. And you have structure. You have low, lower high, lower low, break. So this could have been even an internal long, playing it like this towards that high. However, that high never got hit and then it sold off. So that would have been a tricky one. And it would also be against your short. So then you have to be very careful, because the target had not been hit of your range low, which 9 out of 10 times still gets hit. As you can see here as well. So price came up, sold off, cleared the target, and right now it's basically failing to reclaim the former range. So if we zoom out, my POI is this demand below. But it's funny to see that if you know what to look for and follow the clear triggers, that this super local price action is tradable. Well, if you zoom out, then you think like this is nothing. But it's all tradable. Beside that, I'm not really interested here locally until this demand gets hit or we take this high. So that's it for the main. I'm not sure. Let's see Daniel's question. How do you generally decide whether to play stop loss above tap 3 or 4? Well, it's mostly peace of mind. So as I showed, you can, if you have the internal breaker structure and you are in a supply POI, so you did tap into your extreme liquidity, which was right there, and you have a good local breaker structure, and you are at your value area high, so you need to see how many confluences do I have. So here you had the you had your model 1, which was confirmed with local breaks, break there, break there. So then your technical target is already right here. And then if you want to play the model 1 into the model 2, you can also look for confluences. So are you in supply? Did you tap extreme supply? Yes, I did. Are you in extreme premium, meaning very close to your range high? Yes. Are you back at your value area high? Yes. So then there's very little room for error right here to play this as your fourth tap. But most important is that your structure confirms it. So right here you had clean 2 candles down into new high and then that strong displacement lower. And that is basically your confirmation that market maker is protecting his position and wants to sell off for lower. So then if you see this, you see that you reject perfectly at your value area high, and you have a good internal break structure, then here you could say, this is my clean invalidation because we have structure confirmation from the low up. Then you can just trade it like this. But it's also a bit of experience. It's not black and white because you can also sometimes that structure is a bit sketchy, or sometimes you still have more refined supply above, or some other reasons. And then just for peace of mind, you can also use that stop above. Or you can play it like this, and then okay, if I get stopped out, then I can try it again with a new stop, and then I just use this as my invalidation. But then you have to be willing to get stopped out first. But technically, if you tapped into extreme liquidity or extreme supply and get a good internal breaker structure, then it is valid to use that fourth tap as your invalidation. And it also depends a bit on RR, obviously. Like 7R, that's very, very good. Maybe if you then think, okay, if I need to give 2 attempts for it to succeed, then you still have a big win on your hands. So that's it mostly. Let's see what BTC. Okay, BTC came into that most refined demand. Is bouncing a little bit from it, but nothing significant. Yeah, I don't see really any solid trades today. Gold, my plan is clear. For BTC, yeah, you can scalp it. For example, here expect it to go there and then we down. But yeah, I just want to wait for the clean levels. They will always follow. For ETH, it's not clean. Sol is not clean. Hype was pretty clean, but failed to take out the extreme liquidity. Still, everything is bullish, mostly on hype. So don't think we are too high, I'm too late. If this gives a reaccumulation, this can just continue into new highs. So that's what I'm mostly looking for. And beside that, in Ripple, I had to rechart everything because I went back to the white colors. Yeah, not clean. ZAC is reaching. Like the good thing is that it did not make a new high. So this high was not taken. If you take it, let's say this week took out that high, that would mean that this is your market structure low, in which you now have a bearish boss. But since we did not take the high, means that the market structure low is still lower down. So if we look at most important structure, for example, daily, 18 hour, 12 hour, then this is still the market structure level. Reminder, red lines on my chart are always important market structure levels. If it's below, then it's a bullish market structure. If it's above, then it's a bearish market structure. So this is still bullish, and I don't see this as a range. I see this more as a bullish break. And then this potentially as a range. So then we can watch. Let me quickly chart this. I haven't looked at it in a while, but we can just do a fresh chart. Let's first zoom out. Do we have clean demand below us? Or supply, obviously. Yeah, this is demand, but on the lower time frame it's cleaner probably. Yeah, so this is a clean demand. And that one above technically also. So you can just mark them out both. And it's always nice if you have a range with clean demand below it, while your main price is still bullish. That's super nice, because then this can just tap into it and then continue. Okay, so that are clean demand levels. This is our market structure low. This is our new range with tab 1, tab 1. This is not tab 2 yet. In order for this to call tab 2, you want to have a move back into your range. By the way, I am starting shortly to recover all the Wyckoff videos, the most important ones. So those will be interesting. Then let's see if we have some more levels. I really like this demand. On the upside, we have supply right here to our super clean on the 1 hour supply. So mark that out. You see that price is not straight nuking, but kind of at least there is some buying right here. Otherwise you would just continue down. Right now you reach the lows and see some absorption. That is a good sign. And locally you also have, technically you trade low, lower high, lower low. So then this whole block is also supply. It's not super strong, but I'm gonna mark out this local supply. Okay, that's enough. Then this is potentially tab 2 if you move back into your range. And you can also watch where is the deviation threshold. Look, and you see, because the current high and low, and we have demand below with the and then the deviation threshold is in the demand. So you can even tap demand, still stay within deviation threshold, and then this can still be a valid tab 2. So that's also pretty nice. And then what is the volume profile showing? Yeah, that's not too good yet, but in the making. So this would be a range I'm watching to see if this can develop into tab 2 or if we tap into this demand, because high time frame trend is still bullish. So if we zoom out, you technically have high, higher low, higher high, and in these can all be higher low, higher high. So if you then get a bullish range or an accumulation within that range, that's super nice. Then you have a trend with accumulative price behavior that are confluences you want. Very locally, you have this local range, but you could even see maybe if you sweep the low and then, for example, give a model 1 or model 2, they could also trade this as your tab 2. Back here, come back down, and then see if you make a model 2 or maybe a model 1 and then trade it. So pretty clean chart to keep an eye on, which I'm gonna do. Alert there. And ideally, you get the push already. Like best case scenario is you sweep the low structure break right there, long it, push back. Then this is step 2, and then you can watch, do you come back down for model 2 or that model 1. But this is generally what I'm looking at for hype, for SEC, by the way. Beside that, it's waiting season, but the setup will appear again. That's one thing for sure. Gold not doing anything. Let's get back to ETC and then I will answer some more questions. By the way, I'm having access to, let's see, to a new beauty right here. I still have to dive into it. It's still beta. Nobody has access to it except a few people, including me. So I still have to dive into into it all because I don't understand anything of it yet. But it's obviously super interesting stuff again. I don't know how to interpret it, but I will study it, and then we can build some nice edges. You can technically find fractals and find all kind of stuff. So pretty interesting stuff. But let me look at the chat while watching the low time frame, because often I'm better in the low time frame as the high time frame. What I already see here, nice liquidity. Can this be a valid range? Can be. Would I watch it from this? Here, you always want to have your range high and low be your structure level as well. So here we have nice range high, which is also your max structure level, range low. And if you take the low again, but this is all scalping. But, let me look at the chat. Zlatan said, as an answer to Daniel, placing it above supply gives so much peace of mind. These small stoppers can be very bad mentally. Yes, that's definitely true. You have to be ready to eat the loss because it can wipe you out in 1 minute, and then you should not turn emotional because then things can go badly. So indeed, at the start, I would just for peace of mind put that stop loss above the supply. Also, a 3R for the setup that's super good. You don't need to hit crazy RR numbers. Just consistently 2 to 3R is all good. Coca Dorade, good to see you. First time I see you in the chat. Do you usually pull volume profile from pivot highs, lows, and from volume perspective, where do you look for? I use volume just to see aggression. So right now I see a volume spike right here into the former daily low. Right now I see that we are sweeping it and holding it. This shows me kind of buyers are present right here because there's a lot of selling into this low, but we don't move further down. If you have a lot of selling into your daily low, then you would expect this kind of behavior. But instead, we have a lot of sell volume right here. Here we sweep the low, and now the volume is drying up a bit, and we are forming a range, which could be a signal that the selling pressure is getting absorbed, and we are moving higher. Besides that, it's hard to quickly explain right now how to use volume, but basically I'm looking at levels in pivots, so clean supply, clean demand, and there I see aggression from one side, either buyers getting aggressive at the highs or sellers getting aggressive at important lows, and then see if they get trapped. Then watch for local accumulations or distributions, structure confirmation, and then trade it to the other side. And also, where do I want to trade? I want to trade when there's volume, not when volume is dead. Regarding volume profiles, I always draw them in a range. So, for example, on gold, you at this range, then I draw a volume profile just to see value area low, value area high. And you can also in the downtrend pull them. What I think that you mentioned that you usually pull volume profile from pivot highs to lows. Yeah, you can do that as well. For example, today, this is our daily high, this is our daily low. So then you can pull it from there to there, for example, and then see where is the most volume. That's right here. So our daily trend is also down. So basically you have low, lower high, lower low. If that trend will continue, then you can pull your volume profile and see if that aligns with a supply level, for example. Right now we have supply right here. We have the daily point of control, and we have the downward structure. So if we gonna reject, then this level right here is the highest probability level to do that. This is pretty local. You can also do that for more important highs. For example, take it from this swing high to this swing low. Then, yeah, in this case, it doesn't tell you too much. But you can pull it from swing lows to highs and swing highs to lows, and then see if it aligns with retracement levels, with supply levels. What I just did locally on the daily, you can also do that from here. So then you take yesterday's high to here. Then you technically get the same. Most volume is traded right here. You also have that downtrend, low, lower high, lower low. So also here, if you come back and we continue the downtrend, highest probability reversal level is in that daily point of control, or at least not daily point of control, but right there, where your confluence is of the volume. So that's how I use volume. Might be a bit complicated if you heard it at first, but I will quickly look at the order flow as well to see if we have some absorption right here. New BrighterData looks class. Yeah, it looks really good, but I have no idea how to interpret it yet. But I believe you can check it on daily candles and fractal match. For example, for today, 83% of the days would close bearish. The high was put in, yeah, a lot of data. Let's quickly look at MMT. Yeah, so we have few important daily point of controls above us, which if you, similar as what I just showed, if you get move up, pretty likely that if you continue the downtrend, that you come back up and then reject from there. So if you are interested in shorts, this is a clean level to look for that. What is interesting is that since that high yesterday, open interest has been ramping up pretty aggressively. Well, CVD is selling off. So it seems like quite a lot of shorts are in the market. And spot is also selling off pretty aggressively. So until proven otherwise, bears are definitely in a stronger position. So then be very careful with longs until you get super clean triggers. But looking at this, you have some seller aggression, quite some sells right here. So maybe you get a bounce, but the highest probability is that you still maybe here and then come into this and then reject and then still go lower. Simply playing the volume point of controls, which was, let's see, where's the view up? Right there. Yeah, so that would align with rejection around there. So I'm keeping an eye on that. Let me mark that down. Daily point of control is sitting around 7.8, 7.58, 70. 7.58, 70. So around here, we have daily point of control. Potential shorts from here could be the case. For now, I don't see much to trade. Gold is slowly, but we can watch if it can continue to hold here. Then potential accumulation, but high probability is that we already lost this value area low. So then lower high for low low. And for the other coins, yeah, not too interesting, but can still develop. Although hype and SEC are more interesting, which I just explained. Yeah, I will look at link and then it will be the last one. I don't trade link myself, so what is your position? Like, this is why I don't trade link. Looks very bad. A lot of liquidity. Broke. Bearish right here. Right here. You tapped into key demand right here. Supply right there. Waiting, looking for shorts. Yeah, you just tapped into key demand, so shorting here is not really what you want. Yeah, maybe this from here, if you deviate that, look for shorts. But down here, the problem right here is where are you gonna put your stop loss? Here you tapped into supply, then rejected, so this can be your high. But I have no idea. I'm not gonna come up with something. I would wait for higher to short it for clear weakness. Maybe first come down, then come up. Then if you do this, short it. But yeah, other than that, it's just waiting till something appears. I cannot give you short trigger right away. So that's it. Thanks everyone for tuning in. Hopefully the stream worked well this time. I think it did. I will dive into the BrighterData stuff and then keep you guys updated. I believe I can already share it with you, but otherwise I will still do it. So then we do it in silence. But yeah, for now, waiting for some clean triggers. At the moment, not much. But for the coming days, I think Hype, Jack, they will probably provide something to work with. And obviously Bitcoin also as well, but just waiting for something. So thanks everyone for tuning in. And then I'll speak to you guys in the Discord. Cheers.